Well, tonight we'll take you behind the scenes of an administration company. Andre Leroux from Maitland joining us from Cape Town to talk more about the intricacies of fund administration and why choosing a reputable administrator is so important. Welcome to the show, gentlemen. I'll start off with Andre joining us from Cape Town. So Andre, first off, let's kick off with a high-level view of the key responsibilities of an administration company.
A fund manager is responsible for getting alpha in the portfolio, so that's a pretty daunting task these days. What he's got to concentrate on then is what he's good at. What we then do after that is, once he's found what stocks to buy, what instruments to put into the portfolio, we really take over from there, and from the point of order. We facilitate that order into the market, into the sell side. We settle the trades, we value the portfolios, and then ultimately we send out the statements to the end investor so that he can see in the end whether he's richer or poorer at any point in time.
So let's talk about the evolution of fund administration, because it used to be in-house and now it's more and more being outsourced. Is it becoming more specialized, basically?
Well, I mean, I think that firstly, the amount of instruments available for trading, especially globally, and it's starting to happen here in South Africa, it's just becoming more and more and more. And on the back end of that, you need to be able to have specific people that focus on specific areas of the industry in order to make sure that they can make a success out of that. Also, remember that administration costs money, I think, at the end of the day. You know, it's not the systems, the people, the know-how. It's a specialist, skill at the end of the day. We have a graph to show you where that specialist skill lies. And if you have a look there, you can see what the biggest administrators globally are at the moment. It starts off on the left-hand side of the screen, and you can see JP Morgan over there and State Street. Those are kind of the big administration players in the world. And then it kind of staggers all the way down. Remember, this is in billions of dollars. So you're looking at billions of dollars. And you can see Maitland's assets. They make it onto the graph as being one of the kind of the larger ones globally. And if I just want to show you quickly what the Maitland assets have done since 2008. And you can see the growth in the Maitland assets since then. And here's just the JSE. And it just shows you the index level of the JSE, which is kind of relatively flat, regardless of the fact that you've actually seen administration growth. I mean, Andre, maybe a question from my side. You've seen administration growth for your assets that you're now administrating. What is the secret to that success? Surely it can't just be South African assets.
It's mainly South African assets, Kirby, but really what we did about eight or 10 years ago, we invested very heavily in international systems and technology. And we coupled that with quite a unique model, which provided the fund manager with a very deep front, middle, and back office solution. And as that platform matured, and the model then resonated with the managers here, and so we've seen a big growth in the number of managers coming onto our platform. And on top of that, a lot of them have been boutique managers. There's been a growth in the boutique sector, and those boutiques have done particularly well. So it's been a combination of getting a model very well implemented, and then our managers doing very well as well.
Andre, from my side, I guess you work in the unenviable industry where if everything goes right, nobody gives you any credit, but boy, if something goes wrong, you'll know about it. But can you give us an overview in terms of the kind of, how do you differentiate yourself from your competitors? Is it a technology advantage? Is it a kind of service or innovation advantage? And then maybe just quickly give us an overview of how you charge for the services that you deliver.
So firstly, just on the charging, basically it's a blend of assets under administration or assets under management, a charge for that, and then a consumption-based fee. So that's the broad basics around charging. In terms of the model, we've differentiated ourselves, as I said earlier, on providing a front, middle, and back office solution. So really what the manager is able to do is sit in his office using our technology, our systems to do his modeling, to select the portfolio that he wants to, and the trades that he wants to execute those trades, and then we really take over from that. And that's right from the small boutique managers up to the big fund managers is a model that's worked very well for us.
So it really sounds like, the use of technology in this case as being one of the key differentiators for Maitland. Let's talk about, I mentioned it earlier about outsourcing and insourcing, if you could call it that, and I suppose the benefits of choosing between the two. Andre, before we take a look at the graph, what are your thoughts on the kind of trends we've seen towards outsourcing fund administration?
Look, some of the trends that we see now is really around consolidation in the admin industry, and the reason for that is that it's becoming so technology intensive, but also with the recent changes in regulation, you really need the scale to be able to provide an end-to-end service for your fund managers. And so the smaller administrators, the mom and pop shops can no longer compete with all of the regulatory change, with the investor protection, with the compliance regulation that's required. And so the overriding trend is we're seeing consolidation in the industry. The bigger guys are getting bigger, and the smaller guys are really focusing on very small niches.
Yeah, I mean, and I think that's kind of the telltale signs of becoming a mature industry. I think the industry is littered with administrators and where they've actually made mistakes in the past. And it's a headache for an asset manager when an administrator makes a mistake, because as Roland quite rightly said, then you've got to roll everything back and you've got to start again. You've got to reprice many of these systems.
Yeah.
And I think that for me is kind of one of the critical elements of an administrator, is the fact that they can sign off on a day and make sure that they sign off down to down to the number that they're supposed to sign off. I mean, Andre, what do you guys do from that perspective in order to make sure that there's kind of all these kind of checks and balances in place, that the mistakes don't happen and you don't have to roll back over time?
Yeah, as Roland said earlier, nobody congratulates us for getting it 100% right. Basically, our game is about reconciliation. So whether our front and middle office platforms need to reconcile with our back office platforms, there's reconciliations happening right through the day. But really, it's about automating of those reconciliations. So we, as an example, we reconcile 1,800 bank accounts on a daily basis, getting feeds from the banks into our systems and doing that on an automated basis. We reconcile with the asset custodians, again on an international and automated basis. And then also just when we perform trades, our managers are again performing those trades in a very automated fashion, high levels of straight-through processing. So it's just automation, reconciliation.
Andre, in terms of the retail versus institutional administration, maybe you can give us an overview there. I don't know how much you play in the institutional space, but I guess unit trust is the bulk of your business, and maybe you can also just touch on the ability, because some retail platforms have been wondering when they can add ETFs and ETNs to their clients' portfolios. Is that possible yet?
Absolutely. I mean, we're even getting to the point where hedge funds are becoming daily priced hedge funds, so those can be provided as part of the bigger fund platforms. The bulk of our business at the moment is essentially what we would call institutional business, in other words, pension fund business. Having said that, we account for probably 25% of the Cisco or the unit trust industry's unit trust pricing at the moment. But we see ETFs as a big trend going forward. It's one of the things, again, that we've tried to differentiate ourselves on is providing an end-to-end platform where you can perform administration out of pension funds, unit trusts, hedge funds, ETFs, and right the way through to private equity.
Let's maybe just have a look quickly at some of the trends, just what has been happening. I just want you to look at this graph over here. This shows you assets under management. Now, this is outsourced versus in-house. So if you look at the orange bars at the top end, you'll see the amount of assets that are outsourced from an asset management perspective. These are asset administration, so you're looking at it from an asset perspective. These are actually taking care of the actual people that own those assets. That's called liability administration. And then hedge fund administration. You see 97% of the assets in the hedge fund industry is outsourced. And let's just look at a second graph. This one over here shows managers versus outsourced. So it actually shows you from a manager perspective what happens from that perspective. Again, from an asset perspective, you see that almost well, 64% there is outsourced relative to 36% that continues to do it in-house. And if you just look at the hedge fund industry there again, 96% outsourced. I mean, Andre, that for me is an interesting phenomenon. You see the hedge fund guys kind of sitting down and saying, well, look, administration is not our forte, and it's certainly not something that we want to get involved with. We think it's a specialist skill. So we need to be able to go to somebody in order to help us actually, administrate these assets. Are there anything specific that you guys need to do for the hedge fund industry? Was there any new systems you needed to develop? What is it that was required, so to speak?
I think the driver around hedge funds in South Africa has really been at the forefront of self-regulation in that respect. So typically, the hedge fund guys were guys who were potentially or were working for big institutions. They decided that they could make more money by themselves. They went out and they really wanted to stay very, very lean. And so what needed to happen then is that they were looking to outsource as much as possible. The industry was very aware that investor protection was very important. And so independent oversight, independent pricing of the underlying instruments, independent calculations of performance fees, etc., was important. So those two were the overriding reasons why most hedge fund managers now outsource. And in fact, it's becoming almost a given that if you're a hedge fund manager, you outsource. Luckily, we've seen a lot of convergence between traditional long-only managers and hedge managers. Some moving into hedge funds from traditional, some moving from hedge fund into traditional. So the systems, essentially, if you've got the right systems in place, they cater for both.
Roland, what are your thoughts on this trends, the kind of some of the trends we've been talking about now, especially in light of the fact that it's becoming a lot more sophisticated, so it is important really to have the right skills managing these funds?
I think fund management, Kobe alluded to in the beginning, is becoming very complicated in terms of there are new instruments available. There are new ways to manage risk. So what some funds do is they're using more and more derivatives. All of these things need to be reported on and priced and administered correctly. And I guess the skill set of the administrator has to also change or evolve quite a bit, and they have to add the kind of people that can understand this kind of stuff. Never mind the technology side, but actually, leverage in hedge funds. How do you report that? How do you, on a daily basis, keep those contracts marked to market? Those kind of things are all part of a bigger solution that the fund manager actually just wants to outsource often for a fee.
Yeah, let's also talk about African exposure, Andre, because of course there's a lot more demand now to get exposure to Africa through various funds that some of the African asset managers have. Where does administration fit into all of this? Where are these African funds and how are they administered?
I think somebody said the other day the financial capital of Africa is London, and so by definition I think a lot of the administration is still happening in Europe. But if you look at the recent, there was a recent study by PwC of South African managers, and one of their strategic imperatives is to move more aggressively into Africa. We already administer a number of our clients' African funds, and some of our international clients have African funds. I think the move there in terms of African markets is that they're going to follow the Luxembourg and Ireland legislation, where they allow certain activities to require certain activities to be performed in the various jurisdictions, but then the back office can be sent to a place like South Africa. So we're quite nicely placed to perform the administration in South Africa. Our model generally says that we do the bulk of the work in Cape Town. And the managers will, as long as they have a presence in the various domiciles, can outsource their back office.
One of the things that I find quite interesting is that we've had a whole outsourcing industry, specifically if you go back 5-10 years, a massive outsourcing industry, call centers in India, and we've seen some of those kind of happening here in South Africa. And it might be quite good to ask Andre, and Andre, this is a question for you. We've seen this trend globally as far as call centers are concerned. What about administrators? Surely from a RAND perspective, you can charge a better fee than a global administrator that charges dollars, say for instance. What about international clients? Is this something that you see growing?
It's certainly a model that we'd love to expand. We've been very busy just looking after the South African market over the last couple of years. The reality is, though, that we don't have that many cost advantages. If you look at the sort of systems that we run what we call big, ugly, industrial strength international systems, and we get charged in dollars for those things. Our people are typically not that much cheaper than perhaps people in India and Poland. So, and the level of skills of the people that and staff that we require now are no longer clerical staff. They're literally people with BCom, business science degrees, very numerate, very IT literate, innovative. So. We have certain cost advantages, and we need to try and exploit those. But it's not. We try not to be a cheap and nasty destination, but a service and platform breadth and depth play.